Hey guys, what's up? Welcome to week number 5 of the dividend investing case study on my channel here, guys. We're on week number 5. We just passed week number 4. So a little bit has changed since we first started this dividend investing case study. And if you guys missed the earlier episodes, I'll link to the whole playlist in the description of the video if you guys want to check it out. So the main thing we changed with this dividend investing case study is we are upping the amount of money I'm putting in every single week. And we changed it. Originally, we started at $100 a week, but we're upping it by $10 every single month as a way to challenge myself and encourage you guys to do the same. So, if you're not already like investing on a weekly basis, like we are here, I'd highly recommend that you guys do it because this is what's going to grow your money. This is what's going to allow you to earn that passive income, and it's a great way to take something like saving up a lot of money and just break it down into small little manageable chunks. So I'm putting $100 a month. Like, you guys don't have to do that. You can put even if you just put like $50 a month, or $50 a week, sorry. You can work on that to start building that dividend investing portfolio, and then over time, like maybe you can add like extra $10 a month kind of thing, or $10 a week, or $5 a week, whatever you guys want to do kind of thing. You can do more, you can do less, whatever works for you. But I strongly encourage you guys to do that because it's going to kind of push you to get there, and you'll be surprised after a couple months or 6 months or a year of doing this how much money you can actually grow and how much of a passive income stream you can gain. So in this video, we're week number 5. We're just gonna do a quick rundown of the stocks here, guys. I'm on Wealthsimple Trade here. So our stats for the day is we are down $1.45, but that doesn't really matter. Our weekly stats are we are up 15 cents, and then our month stats, we are up $8, and our all-time stats, I'm just going to go to all-time since we've only been doing this for about, actually 3 months is more accurate. We'll go over the past month or so, month and a half-ish we've been investing kind of thing. We're up $10, which is 2.5%, which is pretty solid actually. I was surprised that, I'm really surprised that stocks are still going up, but I'm not complaining. So yeah, that's where we're kind of sitting at right now. So since we started investing in about kind of late December, I'd say it was summertime or late December. We're sitting at about $10 right now in gains. We haven't gotten any dividends yet, but we should be getting some soon because I think some of our ETFs are actually going to be paying out pretty soon. I think 1 or 2 of them will be, so we can start getting some dividend income rolling, which is the whole point of this case study. So I'm pretty excited about that. Let's go over the portfolio just in case you guys don't already know. And once again, I'll link to the other videos if you guys want to check them out. And be sure to subscribe if you want to see these videos because I do publish them once a week. We kind of do these videos once a week. So the first ETF we have is this. Actually, the first ETF is an XRE, which is a Canadian REIT real estate fund. This one has been doing pretty solid. You can see here that the graph shows like how these funds are going. I'm not going to go in and show you guys. Actually, you can see on the right side here. Sorry I can't zoom in here, but you can kind of see how each individual stock is or ETF is performing kind of thing. So you can see right here on the bottom it says. And if we actually go, I'm not too sure if we go per week, it adjusts it. It looks like it doesn't adjust these, so it doesn't really matter. All right, so we have XRE, which is down about negative 39%. We have VYMI, which is a Vanguard. I think this is the Vanguard International High Dividend Yield is down a little bit. Go back. Then we have VDY, which is the Vanguard Canadian High Dividend Yield Fund. And then we have this Shaw stock is what we bought. On the 4th week of every month, we buy an individual stock. So our portfolio is based off of ETFs, and then we're kind of going with individual stocks. So the plan for today was to buy more US based stocks. But the problem I'm finding is I wanted to get some more Vanguard funds, but the Vanguard funds are very expensive. And we only have $110 to put in each month. So realistically, we're going to have to kind of wait before we maybe get some of those funds. But the cool thing is I've kind of looked up, I'm a big fan of iShares, and I found some Canadian hedge funds, which are pretty much the same thing, give or take, as I'll show you guys here. And we're going to be using some of those because they're a little bit cheaper and easier to buy into. So if you guys can't afford Vanguard funds, look into, there are some alternatives for you guys to use. And the one today we're going to be looking at is called, let's bring it up here. It's called XHD. So this is iShares US High Dividend Yield Equity Index ETF Canadian Hedged. Basically just means it's in Canadian currency. So this makes it easier to afford. It makes it easier on taxes and stuff like that because you don't get taxed. So yeah, I think they seem to perform pretty decently too. I'm not too experienced with what the difference is. Maybe somebody can leave a comment and let us know. But it just seems to be a little bit easier to manage in your local currency kind of thing, and easier to buy. So this is exposure to a diversified portfolio of 75 high quality U.S. dividend paying stocks. So again, we're focusing on dividends, right? And the cool thing about this fund is it actually pays monthly. Most of these ETFs pay quarterly, but I've been looking at trying to get ones that pay monthly that also have a good return overall. And this one looks pretty solid. So we're gonna kind of peek into it here. Companies are screened for financial health and dividend sustainability and earn monthly dividend income from some of the world's largest multinational companies. So once again, it's predominantly U.S. based, but it's like they have a little bit of other things in there too. So here's the growth here on the side. So as you guys can see, pretty solid increase. If we go to the let's take a peek at the distributions first, so we can see that it is a monthly distribution. We can see the ones for last year, so June, July, August, September, October, November, and it looks like it pays towards the end of the month. And nice little actually amount here, so 6 cents per share. So once again, it's not a huge dividend, but because it's only $30 a share, you can start to rack up the shares pretty quickly, right? And it looks like they did a little bonus here in December. Let's see if last year they did the exact same thing. Looks like they didn't, as far as I can tell. So maybe that was like a little bonus. Some companies do this, where they give like a towards the end of the year or towards usually towards the end of the year. If they have any built up capital that they have to pay off, they'll just send it all as a nice chunky dividend. So you can see here, like if you reinvested into the fund, you actually got $2 per share. So that's actually pretty cool. So they must do. Some companies will do this as well. Well, where if you have drip set up, which is what I highly recommend, and I do have that set up, which is basically means your dividends get reinvested into the fund. You got like a bonus of $2, which is crazy. So that's pretty cool. Hopefully they do that again. But the main point here is that you can see here like a nice little increase, and over time you can see that the fund looks like it's increased, right? We have 0.6, 0.6. It's kind of going up and down, but you can see here like in 2020 we have 0.73 already. So it's a little bit of an increase. So hopefully throughout the year it keeps kind of going up there. But it looks like a pretty solid fund. And the most important thing of all is the actual returns. So we go average annual. I'm going to see over the course of 1 year at 8 plus 18, which is pretty good. Obviously last year was a pretty good year. Last 3 years we're sitting at 7.84, which again is pretty solid. In the last 5 years we're sitting at 7.6, which is again pretty solid. Like that's pretty decent. And then 10 years, obviously it looks like this fund has only been around since... let's see if I can find the actual date here. 2013, 15. Nope. Well, it's been around for the last 5 years. Maybe 2016. Okay, so it looks like it's been around. Should be information on here somewhere. Oh wait, right here, 2014. So December 31st, 2014 to 2019. So it's only 5 years old. Which is not too bad. Like, I mean, it's not a huge base, but it's pretty solid. Like, if you look at the companies like that are actually in the funds, they're pretty solid. So I'm not too worried about it. And you can see inception is about 9%, which again, or 9 to 10%, which again is pretty solid. You can see the total how it adds up over time. So if you invested here for the past 5 years, you'd have an inception of about 91%, which is again is pretty solid. Calendar year. You can see individual year. So 2015 was negative 42, 2016 was 14, 2017 was 11, 2018 negative 5, and then 18 again. So it is a little bit up and down, but that's expected with U.S. stocks. And you can see the ups are a lot higher than the downs, right? Like negative 1.42 isn't that bad compared to 14, and then 11, and then negative 5, then 18. So it's not that bad, right? Pretty solid fund. And then we can see here at the bottom. I don't know if they have distribution yields. Okay, so this is their dividend yield, I believe, is sitting at 4%. So that's a pretty solid dividend yield. Again, because it's paid monthly, we can take the earnings and put them back into the fund, which is very attractive. And then we can see the risk the risk indicator, which is a medium, which again, and this because this is a pretty solid fund. Management fee is 0.3, and then the MER is 0.3 as well. So looking at the holdings here, you can see some pretty solid companies, AT&T, Johnson & Johnson. Some of these kind of overlap with the other ETFs we have, and that's fine. I don't really care that much. You'll get a lot of overlap when you pick like different ones, right? But we don't have a good solid US ETF, so I think this will be a good one to that we're going to put in for the most part. Yeah, I think that's what we're going to do. So this is 3057, so we're going to go into Wealthsimple Trade here, and we'll see how many we can buy is XHD. So I'm going to search that up here. Go into Wealthsimple. We'll go XH. Hopefully my BlueStacks is going to work here. For some reason it wasn't working earlier, so let's see if we can get it to work here. Might just be a little bit slow today. Click on this. Let's give it a second here. I might have to restart it. XHD, there we go. And we're going to pick the first one that pops up here, which I think is the only one there is. So BlackRock, Canadian iShares, US high dividend yield. I think that's the right one, yep. And we'll go buy. And let's see if my math serves me correctly. We have $108. We could get about 3, I think, right? For about 90-ish dollars, right? So let's go 3. $91. We'll buy that. Market is currently closed, so it will not be placed until the markets open at January 27th at 9:30 a.m. Yep, it's actually 8 a.m. right here, guys. We're doing this video nice early in the morning. So we'll confirm the order. And I think we're good to go. All right. So we get that back. And that'll go through within like the next hour or so. So that builds out the US equity in our portfolio because we needed a little bit of US. We had Canadian, we had US, we had international. And yeah, I wanted to get a little bit of US stuff, so that's cool. And yeah, we have $12 left. I don't think we can afford anything for 12 bucks. So I think we're just gonna pass on that. We'll save that. We'll save the $12 for next week, and we'll kind of add that together, and then we'll just buy something else. What we've been doing is when we have a little bit extra money, we're just buying whatever we have extra. So like I've been purchasing a lot of XRE because it's the cheapest one I have. So that's what we do if you have any leftover cash. But if not, at some point, I'm not too worried about like the balance of the portfolio yet. But over time, maybe we'll start focusing on that. I just want to start buying stuff, right, and get that dividend income rolling in. So I think that's pretty much it for this video, guys. Hope you guys like this video. I think that's pretty much it. There's nothing else to really update you guys on other than just the overall portfolio. So let me know what you guys think in the comments. Hope you guys enjoyed this video. Let me know how your guys' stocks are doing. Hope you guys liked it. And yeah, share anything you have in the comments. And thanks for watching, guys. Stay tuned for next week. And remember to subscribe to the channel if you want to see these updates. All right, guys. So take care, and I'll see you guys later.